Actually, what will attract people to flood into Singapore? Think about it. Is it because Singapore has got a lot of things to offer? We've got lots of space, we've got lots of greenery, we've got lots of arts and culture. Are these the things that people come to Singapore for? It is actually employment. The bulk of the reason, unless we are talking about visitors who are here on the short term just for a tour, it is employment. So would the recent data on employment, 147,000 jobs gone in the first half of 2020, be a good reason that people will come into Singapore in future, in the next 2 years? In the third quarter 2020, then Ministry of Manpower just released this last week. And well, the government is of course trying their best not to dampen the mood, even though the mood in the jobs environment now is not a very rosy one. So look at the V shape on the left hand side of the graph. The V shape doesn't signify a recovery as long as any data point happens to be in the below the zero line. No matter how many V's and W's you write into the area below zero, we are still having negative growth, meaning the total number of jobs lost from the system will keep growing. So in the first 3 quarters, even though the graph depicts something a little bit more positive, in the first 3 quarters, 156,000 jobs are gone for residents. Residents being defined as Singaporeans and permanent residents. Retrenchments continue to go up. Of course, what will attract people to come in? Many companies still intending to reduce headcount. And this was from the second quarter report. Again, in the third quarter infographics, we try to, the headline of the infographic says, salary and headcount reductions likely to subside. No, it is salary cuts are not as heavy, but salaries are still being cut. So you look at the numbers below, it is still negative 14.1%. Salaries are still being cut, and employers are still intending to reduce headcount. It's just that fewer employers now are planning to reduce headcount because all the rest of the employers who needed to reduce headcount in the last few months have already submitted their intention to reduce headcount. So as long as these data points fall above zero, the pain will continue. So where are the jobs coming from? And because of a lack of jobs, then there is no surprises. Total population fell this year, and this is a cutoff as of 30th of June. So I would expect that by the middle of next year, cutoff 30th of June 2021, that we would a bit further. Now, this one is a complicated. In years, growth was very flat, as non-resident can circle in red here. Population growth was about 140,000, but then you look on the right-hand side, total number of housing units. This is HDB plus private residential units. Total number of housing units grew by more than 200. Grew by about 200,000 units. So if total population growth were merely 140,000, total number of housing units grew by more than 200,000. Where are we going to get the people to rent your investment residential property from? So recently the economic indicators have all been negative, and I just needed to caution investors there is no need to rush to go out there to buy properties. Properties will wait for you. Damage caused by COVID-19, SMEs, some of them are still packing up due to losses. The job support scheme will be tapering off into March next year with a smaller and smaller percentage of subsidy. Some SME owners have in fact decided to retire early. certain categories of businesses do not see light at the end of the tunnel. Ask the travel agents in People's Park, for example. Ask the aeronautical engineer who came back with his master's degree and working in the aerospace industry. When do they foresee re-entry back into the workforce? Many startups are not getting further funding. And with jobs gone and incomes down, many people are actually now just trying to get to sort of tighten their belts and to foot the bill for their mortgages. Office and retail space is also progressively being given up as businesses close. So individual landlords, the large corporate landlords, are also starting to feel the pain. November 19 is a good day to watch, because that is when some of the special COVID laws from the government will expire, and landlords can start to assert their demands for rentals that are late or rentals that have been defaulted. As for residential space, again, my question is, given these sets of conditions and given the last few slides of data that I've presented, if jobs are not going to be created in abundance within a short time, where will your tenants come from if you are investing in a residential property, thinking about getting a stable income, thinking that this will be passive income? So a few articles to share with you. Jobs and salaries are cut. There will be further jobs and salary cuts after the job support scheme is tapering off. Therefore, I repeat the question again, if we open doors, who will be the ones flooding in? Recently, we may also have been wondering, why is the Singapore Residential Market Index seemingly still climbing? And for the last 6 months, we have actually stopped hearing about mortgagee sales, about bankruptcy sales from families who are unable to foot the bill for their mortgages. But this is because of the debt moratorium. 34,000 home loans amongst the 3 banks in Singapore as at end of June are under the debt moratorium. Now, there are more than 10 banks in Singapore lending for home mortgages. Those other banks haven't been surveyed in this report by the MAS. And that is why the most recent bankruptcy sales list was as of April during the circuit breaker, and during the circuit breaker, when the special COVID laws were enacted, the moratoriums came in, and that's why in the last few months we do not see any bankruptcy sales in the market. So be careful about this, because there are landlords who may have to put their properties up for bankruptcy sales unless before November 19, some of these rules get pushed back further into 2021.